The only potential looming out there that we should be a little bit concerned with is the ability of the Federal Reserve to start to dial back the quantitative easing by raising interest rates and pulling back some of those dollars that have gotten out there in the form of excess reserves through the quantitative easing program. That process is going to be more difficult for them to achieve going forward than I think they expected because of the recent rise in the value of the dollar. In the last year, the value of the dollar has risen about 23%. The currency's gotten much stronger. If we raise interest rates and Europe doesn't, and they're not going to because they're engaged in a round of quantitative easing on their own now, when we raise interest rates, that's actually going to cause the dollar to strengthen because there'll be a flow of more dollars into the United States for investment purposes, and as a result of that, the dollar will get stronger. Our exports will go down, our imports will go up, and that is a potential drag. What we don't know is how soon the Fed's going to do this. They still haven't given us any firm guidance on when they're going to start to raise rates. And so what's really going to be important going forward is when we start to get the March and April job numbers, which we'll get the first Friday in April and the first Friday in May. Those will probably be the numbers that will influence the Fed's decision as to how quickly to start to pull back the quantitative easing and to start to raise rates. I look at it as it's sort of a kind of a 250,000 jobs per month is kind of the threshold. If when we get the March number and the April number, they're below 250,000 jobs, which is still a good number. If you do 200,000 jobs, it's not going to get you 3 million, but it's still a pretty good number in terms of job growth, in terms of where we are right now. The Fed might have just a little bit more breathing room before they have to raise rates. But if you start to see 250,000, 290,000 like we had the last 3 or 4 months, they're going to have to act sooner rather than later. And it's not going to be devastating, but it's going to be, we're going to throw a little anchor out and kind of slow us down a little bit. And don't think it's going to have a big impact on 2015, but could really start to influence what's going on in 2016.